Okay, quick weekend look through some US stocks. So I'm going to just buzz through, the media frenzy has come to life, hasn't it, on the US tech stocks, and you know the theme, AI theme. So I'm just going to buzz through a few of these stocks, and we're just going to have a little bit of a reset on these things, and you're going to get a lot of people are going to lose a lot of money basically very quickly in the coming weeks in these stocks. And we're just going to go through and we're just going to have a look at where they went through the screens, where reward to risk is found, where the stories catch up with the actual moves. We've come through this bear market, and in my chat group we've talked about probably tech will lead the next bull market, and tech is trying to lead this move at the moment. It's only a few weeks ago when you were looking at the likes of Tesla, and the news feed was, we 100% off the lows, this that, and the old picking bottoms and looking at percentages rather than price action and low risk entry areas. So rinse and repeat. If you're new to the markets, this is going to drive. It's a dog chasing its tail basically. This will drive you crazy. So I'm just going to go through these, and I'm just going to show you. I come from the William O'Neill sort of school of thought, and the Stan Weinstein. I buy breakouts and I buy pullbacks in trending stocks from early bases, not late stage bases. And I run the screens every day at my site. We look at breakouts, we look at pullbacks, and we look at the what I call GTRS stocks, the gas, what's needed for these things to trend, and have a read of William O'Neill's Can Slim as well. So we'll just go through a few of these stocks, and we'll just talk about them. So Tesla at the moment. Basically, it's just come off the lows, and when stocks do bottom, and there's no guarantee that the bottom is in, it's not even traded a 6-month closing high yet. So they come off the bottom. Sometimes they just fade back to the lows again, as it did here, But if you draw a line in the sand, it's got to break out to be going higher. And, can you draw a line in the sand here? There's a lot of this out there that will be on this stock. If you can find if Tesla moved up here and then based out, that is always going to be the lower risk, more actionable setup than having a diagonal trend line. They're very unpredictable. They get moved multiple times until they work. Dealing with a horizontal trend line is going to always give you a more robust signal. And if that signal's pressing against 6-month or even better 52-week highs, well, happy days. They can do a lot of nothing getting ready and sort of coiling up ready to sort of trend. And no trigger, no trade. So let's just go through a few of these. I'll just go from I've just put 12 stocks in here. There's a couple of pretty low-key ones, but we've got all the main ones in here as well. Not all of them, but Apple, big, loose base. And we've got all the bottoming patterns from the past on these. Imagine this bounce here, you think the bottom's in, and then you have to go through another year of this, 8 months of that. Really obvious. Active low, higher high, first pullback. Anyway, this pro gap here or this pullback here, and then it moves higher, and it still comes in again before it makes the journey. So what we're looking at here, well, we're looking at a big level up here, to be fair, and it might coil back in here, or it might break out at that level. But we had a breakout here, we've had no pullback, we've had a cheat, what we call a cheat in the right side of this base here. You know, the weeks behind us is you know, what we're trying to get out there. There's nothing after a trending move like this, you are not getting any kind of reward to risk. You know, tight price actions and moving out of consolidations coils up the spring to trend, you know, coils up a little bit of trend energy. And you know, this one's been trending, you know, where have you been if you wanted to buy apples kind of thing. It's you must have been living under a stone somewhere to not see that, you know. This one's not as clear, but Microsoft, you know, active low, higher, high. That's a price action reversal, and this is what we call the early bird setup, the first pullback. There it is. It triggered on that day there, and we had an outside up and then what I call a swing kicker. You know, we get a double bottom or a higher low here on the pullback area, and multiple ways to get on board there. We get the trending move. What most people do is they're kind of stuck. They're kind of looking at price action too closely, and they're managing it like a high frequency investor on a daily chart. You know, to catch trends, you've got to get off those intraday time frames and just put these things in trend lane. MRVL, this is just broken out. So, you know, big breakout. There's two ways this can go for the bull case. You know, you get a gap. I call it a gap test swing point. So you get a little reversal somewhere in the gap. And realistically, you're going to be wrong quite a way away. You know, or it takes the high out and just goes on a trending run. So either way, you know, there's two ways to approach that. If you strangle them, you'll never ride a trend. You know, AMD, active low, higher high, not that meaningful. And then it breaks up through 6 month closing highs, and this one is a little bit more meaningful. And mean trend on this stock was here. Did have a swing point here. Any of those are fair game. And then you could, you know, basically draw a little ledge in here as well if you wanted to after there and get on board. This, you know, don't complicate it too much. If you want to be in one of these stocks, you've got to give it the room it needs to capture a trend. So a lot of people get stuck with, you know, stuck on intraday charts and never get even to ride a big trend. Google, you know, it was basing out for months, but you know, you put your line in around here, and it's, you know, another 6 weeks or so it went sideways before it broke out, and you know, off it goes on its little journey there. So same, you know, if you're looking at this thinking I've got to be in AI stocks in this area here, you must have been, you know, you must have had your computer in to not see this. So there's a little bit of a moral of the story here is if you need to read about it to trade it, you're always going to be on the wrong end of these things. And yes, they can keep going, but they will trade like stocks, you know. And I would say if these stocks go on a bit of a melt just on the back of a frenzy, they're probably going to correct hard rather than if they just drift from here and go back in and do like a soft correction and build another base. That will be a better way to look at these stocks. But you know, anyone can do this. This is where it's breaking out. It's got to move through that level if it's going higher. Do you need a story on the back of that? Well, obviously not. No, you know, the story follows the move. Rinse and repeat. Amazon, very early days, active low, higher high, through 6 month highs. You know, it could move up here and then do a normal pullback if the group as a whole want to pull in. Nasdaq wants to just have a rest, and here's Meta. We had this little mini base down here, pro gap. So there's two ways to look at this. As I said before, you know, a move above this level and hope it melts, or the more obvious gap test swing point. You get one here, and then it comes back in a little bit more, and you get another one here, and it doesn't really make much difference how you take those ones. It doesn't make that much difference in the long run. You're trying to capture, just zoom out a bit, you're trying to capture a trend, and then you get like a big loose swing kicker and a new breakout up here, and it's not that clean, is it? But you know, and then you've got this sort of previous breakout high here as well. I tend to go on, if I'm buying a pro gap, if it moves above there and it's not, it's gapped up above the base, but it's not kind of extended above the base, as this one's kind of had a trending run and then it's gapped up. That's like more of a bit of, you get more exhaustion gaps in that area is what I'm trying to, it's there is no science behind, there's no exact rule, but you can see it's trended for some time before it gapped up, so it kind of traded towards that news and then it drifted back in, and this is where you're going to see the high volume sort of swing points and then higher high, and off it goes on its journey again. Same here, rinse and repeat. It gaps up, it drifts back in, you get the gap test swing point on this day here, and it still comes in another day before going on its journey. Let's move down to NVDA. This thing broke out months ago, so base cheat here on the 9th of the 1st, broke out on the 23rd of the 1st 2023. So the two setups were in January, and then this is the other gap where the gaps from more of a pullback, so you get this pro gap up there from a pullback. This one's a little bit more likely to hold rather than a gap after a trend. So you can see it gaps straight up from a pullback is what I'm trying to say. And it just goes on its journey, and then we got this really defined base here, and it still pulled in after the base before it went on its journey again. So even from the worst, it's up 30% from the worst timed trade on that day. So rinse and repeat. It's up 100% from the stage one base. It's up 150 from that base cheat. Tesla, we've talked about that already. Here's another one, Annette. I mean, this one's been in the top of my list for months, and it's just kind of, it's got that price action where people aren't that interested in it, even though it's got that just a little bit choppy price action. So you've got to zoom this one out. It's been great in the past. I mean, look at the price action in the past. But active low, higher high, first pullback, and this one would have failed depending on how you trade this thing. As you know, members at my site know how I trade these things, so it wouldn't have failed for the way we trade. But then you get a swing kicker on this area here, and a lot of volume comes in on it as well. It goes off on a move, but not the most defined base, even though it's been in the top of my list, the top 40 for I don't know how long in US stocks, not the most defined base. And look at this, gaps down on some news, and another swing kicker, swing point, swing kicker, off it goes, gaps up on news again. So it's not the price action you want to be all over. It's a bit messy. It's nice to have more orderly price action. This one here, SOUN, I don't know why this is in the list, but just a small one, a real small one, what might be basing out. It loss making, obviously. It's a TSM Taiwan Semiconductors. Another one, it's gapped out again, and this one here, it's got the follow through day. Where are you really wrong on this trade? Well, for a primary trend, you kind of look wrong down here, and if you want to ride a primary trend, you've got to give them a little bit more room, and you've got to build your position as they trend. But it's same again. It might base out. It might be better to look at it in the future. Another more risky one. So I just thought I'd go through a few of those. you know, it's really tough doing what I do every day and watching these things go through the screens, and then I start to get asked about them. And what do you think of this? What do you think of that? I says, well, and I say, well, you know, it's in the rear view mirror. It went through our screens months ago. You know, why do you want to get on it now? Um, Usually the reason is that you know you're probably getting sucked in by the news, and you know everyone's going to be. I said in my site a few weeks ago, everyone's going to be writing articles on AI stocks now, and it's all, you know, that's what the herd want to hear about. You know, price action is always going to be price action. Stocks will always trade like stocks, and basically, you know, the William O'Neill, the Stan Weinstein, the renowned stock traders out there, you know, I break out some pullbacks and base cheats. You know, price action is price action. If it's already, you look left and you see a trend, you know, there's some kind of reason you've missed that. You don't need the news to take the position. You've got to look at, you know, you'll look at these stocks and you can see it in the revenue and the earnings, and you'll try and pick a basket of stocks what's got gas in the tank, and you will be rewarded. And when you start to get rewarded on these things, you know, the news will follow your positions. It's rinse and repeat. It's always the same. So you've got to step out there and have a bit more sort of confidence in trading, you know, proving and trading and backtesting and your own methodology. And all stock traders end up in the same kind of, you know, you either short-term swings, long-term trends. Everyone wants to be able to ride a long-term trend in a stock, catch an outlier, and that is what we do. You know, as stock traders, that's what we do. I put things, you know, I always say put it in a lane. You know, small to mid cap sort of growth stock, I'll put it in a trend lane. Larger cap stock, I'll tend to put it in a swing lane, or US. You know, because being a UK based trader, a lot of my money's in an ISA, so you know, I'll put it in a lane and I'll stick to that lane and I won't deviate. You know, I'll make the decision before I pull the trigger. All the trade management is attached to it, and that's what you've got to learn. You know, chasing news and chasing all these articles from people who do not trade a single stock for a living is you know, sounds a little bit crazy to me. You know, have a think about that. It sounds a little bit crazy. So you know, there you go. You know that this is where these stocks have been in our screens in the past few months. I hope you get something from it.